if we had to modify anything in that $1.5 million forecast, you'd probably see and you can see on a table in Big Ideas 2025 how we build up the bull case. We'd probably take a little bit from the emerging market part of that stack. But I think the much bigger force right now is it's the gateway into digital assets for institutional. It's a new asset class. I think we can safely say that our bull case is well over $1 million in 5 years.
Cathie Wood has completely dedicated herself to cryptocurrency. She still maintains her audacious forecast that in the next 5 years or so, Bitcoin would rise much above $1 million, establishing itself as a gateway asset for institutional investors as well as digital gold. By 2030, her bull case can reach up to over $1 million, while her base case hovers between $700,000. To put it another way, her prediction places Bitcoin well above the $1 million threshold. With Layer 2 networks building on this momentum, Wood also anticipates that institutional usage will continue to grow, not only through Bitcoin, but also through Ethereum and, until recently, Solana. Please remember to like this video, subscribe to the channel, and enable post notifications before we delve further. Thank you and enjoy the video.
So we are watching our clients and guiding them carefully into the ecosystem. Bitcoin, Ether. We do have private funds which had a very heavy weighting in Solana relative to ETH until recently. And, we made a very good move at a good time as Ether started to outpace Solana. So those are the big three for us. And, we're watching layer twos, of course, as well. And I think you'll see us, as we're trying to educate our primary client base, go more deeply into, the big three, talking in terms that financial analysts and investors will understand, looking at returns relative to risk, calculating the Sharpe ratio, the Sortino ratio, and so forth. So I think that's what we're really doing right now in terms of from an education point of view. That paper is in process. And the other thing we're going to do, like we have done with Bitcoin, so we put out something called Bitcoin Monthly. It's probably going to be Bitcoin bi-monthly, and we're going to layer into the alternative months Ether, Solana, and then the longer tail. So, and what this does is analyze on-chain or look at and evaluate on-chain analytics as, again, we educate our investor base about the kinds of signaling properties that these protocols have that we don't have in equities or bonds because the transparency just isn't there the way it is in blockchain technology. So we'll do ETH, Solana, and others as time goes on, and as they begin to show themselves as interesting, especially to institutional investors. Just learned from one of the founders of Tether, Paolo, that they had no idea that Tether would become an important source of dollar exposure to emerging markets until COVID, when the children of in families in emerging markets would go to their parents and say, you don't have to go into the black market today to buy dollars. We can do this on the internet. And that's how it really spread, which is fascinating, isn't it? We thought Bitcoin would serve that role because we didn't know about stablecoins. And even very recently, I think we're becoming very surprised at how quickly the uptake of stablecoins is. So if we had to modify anything in that $1.5 million forecast, you'd probably see and you can see on a table in Big Ideas 2025 how we build up the bull case. We'd probably take a little bit from the emerging market part of that stack, but I think the much bigger force right now it's the gateway into digital assets for institutional. It's a new asset class. That and the really substitute for gold as a store of value, another use case. Those are the two biggest, and those we have not changed at all our opinion on. So I think we can safely say that our bull case is well over $1 million in 5 years.
Cathie Wood has long maintained that the U.S. economy is going through what she refers to as a rolling recession, which is a protracted contraction in which rising interest rates cause several sectors to deteriorate one after another. With property values dropping by as much as 40%, she has identified housing and autos as early casualties, causing what she calls a recession-like drag on vital sectors of the economy. Wood cautions that other regions will probably experience the same strain in the future, so the suffering is not yet done. Don't forget to subscribe and hit the bell icon to stay updated on our latest videos. We'd love to hear your thoughts in the comments. Now let's dive back into the interview.
And I think that's very important symbolically, because Chairman Powell has wanted unanimity. And so now we've had a break. And part of it is because Chairman Powell's term is up in May of next year, and maybe the two governors dissenting want a shot at that position. You never know. But maybe it is because the two governors, and I haven't gone through all of the notes yet, the two governors are seeing evidence of housing relapsing here, and prices in many areas not responding to tariff increases, and seeing that, well, wait a minute, maybe the surprise here in the next 6 months is going to be much lower inflation. And we've had a few employment reports that they have something for everyone, some strength, some weakness. But I think what's beginning to concern a lot of people is that the unemployment rate for new college graduates is going up. And that's because entry-level positions are being subsumed in many cases by automation, especially AI. And so I think they're looking at this as a potential concern out there. We have been saying for quite some time that the economy has been in a rolling recession. When the Fed jacked rates up 22-fold in little more than a year's time, one sector after another began to give way, starting with housing. Housing, by many measures, is down 35% still from the peak. And we're seeing some metrics take another step function down. So I think that has some people concerned. I think the housing inflation numbers are going to come down. They're already, the monthly numbers that we get from various sources are showing declines. Year over year, they're not declining, except for maybe median existing home sales. But we do think that one of the solutions to the affordability crisis, if sellers really want their homes to move, they're going to cut their prices. And because that is if interest rates don't come down. And if they do cut prices, then the big surprise in the latter part of this year is how low inflation is going to go. And there's a big lag between the time home prices fall and they get into the statistics and leave the statistics as well. So this is going to be with us for quite some time. So I think we've been saying we believe that thanks to certainty now, more certainty about tariffs, tax policy, government spending, and regulation or deregulation, that we're getting ready to move from this rolling recession into a much stronger than expected recovery in the next I'll say 6 to 9 months, it will become obvious.
Cathie Wood tied the opportunities and difficulties she sees ahead together to bring her thoughts to a close. The recent vote by the Federal Reserve, she noted, revealed rifts in the customary consensus, with two members deviating from Powell's position, something we haven't witnessed in decades. She interprets this as an indication that interest in the direction of the economy is growing, even among Fed officials. Systemic flaws are being caused by rising rates of unemployment among recent graduates, persistent housing difficulties, and the weight of increased rates. Nevertheless, she thinks that these forces will lower inflation far more quickly than most people anticipate, particularly when house values continue to decline and eventually trickle down into official figures. Wood highlighted the rapid rise of stablecoins in the cryptocurrency space, particularly in developing nations where families may now acquire dollars without turning to illicit marketplaces. Even she was surprised by how quickly and how large that adoption tail has become. Additionally, stablecoins are contributing to the development of the digital economy, even though Bitcoin is still her strongest belief, acting as both digital gold and the institutional entry point into the asset class. To put it briefly, Cathie Wood is reaffirming her prediction that Bitcoin will easily surpass $1 million in the next 5 years. She believes this to be both possible and plausible. The fundamental forces behind institutional adoption, the quest for a gold substitute, and the deflationary potential of technology maintain her long-term thesis, even if some of her presumptions change, such as stablecoins meeting more demand in emerging markets than Bitcoin itself. Don't forget to like, subscribe, and enable notifications for more valuable content, and as always, happy investing.